to see you guys again. Here we are in doing our live broadcast, and hopefully things are going okay. If you want to ask questions, hit us on Skype or hit us on Skype on Twitter, and then even in YouTube, you could put your questions in here. All right, so we went up today and we tested the top of value. We could not get above it. All right, we made a new high. We took the Globex high out. If you take a look at this profile is telling me that I think this market is basically, unfinished on both sides. Okay, we've talked about that before. This is unfinished here, and I think it's unfinished on the bottom. So we're basically stalling right here in the middle, and we've talked about the fact that this was unfinished down here. And I see all these gray areas. When I see these gray areas like this, it's telling me that we got to spend more time, more volume down there. So this is an unfinished bottom. This is an unfinished here. So we went up and we took out the Globex high pretty well. We couldn't take out yesterday's high. All right. So right now I've kind of drawn the middle between 21 and a quarter and 2098. So for us to is everybody out there seeing us? I hope everybody can see us. All right, good. All right, this is something I'm trying now. I was talking to somebody the other day to take a look at. So this was yesterday's middle. Okay, it was yesterday's middle, but this is a 12-minute chart. I'm looking at it, the 12-minute chart to see if we get any different readings. As you can see, we are inside the high of the opening 5-minute bar. The opening 5-minute bar. CCI is been bullish, as in green here. We've crossed the center line. All right, and I don't think that we can. And we're below the bull bear zone, which is 99 and a quarter. All right, so this move outside of value. Okay, and we went up and made new highs. We're kind of just sitting right in here. I think that the market, when I take a look at, here's a book map, and I've got it kind of opened out up to show most of the day, right? All right, I'm looking at the action from this morning. We made this low right here, okay? And then we went up and made the highs. I'm sorry. Let me back up here. It's 9:15. It's 9. Let me go back a little more. All right, sorry. Here is the low that they made this morning, and then we rallied off this low up in here. Okay. Boom. Back down in here. We tested again, and it seems like if you look at the white and the gray areas in here, there's still a lot of support in this area. They're not yet to give up on this area right now. So it's just telling me we're going to be a little range bound until we can break that 98 level. Until we can break the 98 level. Also, this has not gone as the CCI usually goes from gray to red to gray, red, gray, red, and now it's gray, and it went to green. So there's going to have to be a time in between here that we basically go to gray for any of this break to be working or to get substantiated on the way down. Okay. Take a look at the sisters. They're all above their 5-minute pivot. Right down here. They're all above the 5-minute pivot. As we're talking right here. So I think the market is going to trade in a range. And I think it's going to, and I identified that blue area right there, 98 to basically 2101 quarter is the top of that area. So if we could get back above 2001 quarter, I think the market will go back up and try to make new highs. And I think also if we can get below this 2097 level, actually you take a look at right here, 2096.30 is probably the point where I think the bulls would give up and they would go down to make new lows. So 2096 quarter area. The day mode right now is actually 2099, as you can see right here. Here's the purple, 2099. The market has been very dismal and trading in this trading range, and it's been very difficult to trade with any sort of conviction. I think that I put up today that, you know, we took a look at that 4-hour chart. See if I can find it. There it is. There's the 4-hour chart. You know, broke out on the upside. Broke up on the upside, and we've been trading between the Keltner channels are kind of angling up, but you know, we're just hovering around the bull bear zone. We need to get above 2107 and a quarter to get the market to start really accelerating back up to go to take out the highs. So right now you were just kind of sitting on the sidelines, and unless we could get back above value and hold that, you got to just sit on your hands until this market makes a move out of the middle. It's in the middle right now. So that's what we've been dealing with, and that's the way this thing has been trading. It's been you know, how about yesterday? They take it, sell it down 1,400 points, and then just to rally it back and then make new highs. So, any questions out there that we could help you with at this point? I'm just on the sidelines right now. Like I said, I don't want to be long unless we could get above, or you could get long with a stop below that 96.30, I think. No. Here with a stop below, I think right here, 2096 and a quarter. If you're willing to risk that. There's bookmap right now. You see the resting orders up above. Kind of lightened up here after down here again. So kind of nowhere's land right now. Trying to get out of value again. Any questions out there? What do you got, Ant?
Nothing yet. That's 70 viewers right now.
All right. I think, I don't know if you want, put your questions on Skype.
What is the day mode, Wall Street Frank?
What is it like? What's the definition, or you want to know what it is? The price right here, the purple. I've got 2099. Now, some people may have something different. All right, now look, we're starting to get above value here. Okay, let's see if we can sustain that.
It's the most volume traded.
Yeah,
in the day session.
Day mode stands for the most volume traded. So the price that was traded the most today has been 2099, and it's been right around the bull bear zone. Okay, so we're starting to get back out of value right now. Okay, I don't think you're going to see anything running, because when you see, you know, you take a look at bookmap here, you've got orders stacked up between 2102 half all the way up to 2105 half. So I think they'll just slowly creep up and take them out. There's another feature on bookmap that I wanted to show you guys that I've been playing around with. Let me go and take a look at that. Yeah, so when you do it this way, you can see like these white lines here. That's indicating that this is all one. This is half of the book is one guy's order. So you see this guy kind of boosted here. See how he disappeared? That was a spoof. That's the one the mercs have to go after, a spoof order. You put a big order in, tried to boost it up so he can sell it, and then boom, he canceled it.
All right, you ready for one?
Yeah.
They want to know, what are you feeling on crude today?
What am I feeling on crude today?
What's your opinion?
Well, we had this morning, here's crude. Right. We had the bull bear zone this morning. I thought that we had put the bull bear zone out at what, 50. Let me pull up the chart that I brought up. But I think it's outside of value now. It's traveled through. Let me pull up the chart we had this morning. Hold on a second. Is that it? Let me see. Oh, that's not it. Hold on, you got to give me a second. I think my overall opinion about crude right now is that it's trading on I don't think it has anything to do with the economy right now. I think that crude is basically people that have been short, and it's people are speculating trading it. I think it's done the damage as far as to the stocks that it was going to hurt. And let me see if this is it. I can't find this chart. Sorry.
Minimize this here.
Minimize that. Right. Okay. Yeah, I didn't think so.
Here it is. Value.
That's not. We didn't put it in on that one on that chart.
Oh, okay. I can put up the value areas.
Yeah. So here's profile for today, right? You know, we just have gone up, and then this when I see this gray stuff, it's telling me that the market's gonna trade in here and chop around. I think that this morning we had, I want to say that 56.28 was the bull bear zone, 56.28, and I put that out pre-market, and in fact, when bracket A opened up, I think one of the top step traders asked me, and I had told him that the bull bear zone was 56.28. So anything above that, I was bullish. So they're going to get a little more consolidation. Got this unfinished up here, 58. I think crude ultimately is trading between $45 and $60 the rest of the year. That's just a guess.
Okay. Do you make anything of the tick action this morning? Seems a bit unusual to have some tick spikes without much movement. Pre-breakout action.
No, I don't watch the tick. You mean as the index? I don't watch the tick. I watch these the advanced decline here. I think this is one of the, I don't think the market can go anywhere without it. Sometimes I used to watch the tick more. I used to have them both up, so it's just, one of the things, it's really ironic, because if you see this spike down, okay, this is a 1 minute chart. So this thing kind of correlates, or I'm sorry, this spike correlates with the spike before we went up and made the highs, okay? And that's just always seems to me for years now is a recurring pattern. And I see these things that the spike down or a spike up, you'll see it right before the market's ready to change direction, right? Or you'll have that little exhaustion. How we talked about it right here. So we had the low here at 96.75 to 97, and then we went 5 minutes straight up, and then here we got this spike there down, and then it went up and made its new highs, and you get that spike up, and then we had the consolidation. It's always like, it's just it's mind-boggling, because you can see this all the time. You'll see, it's like this is where some of these longs want to get out at, and they push it down, and the buyers still buy it, and then boom, they go up and they're making the new highs. I'm trying to do some people with bookmap to take a look at ratios at swing highs and swing lows, buys to sells, to see if we can get recurring pattern. But there's so many market participants, it's really quite difficult to get that nailed down. But we're working on that. That's for sure.
Okay. Where are the 5-minute pivots currently trading? In buys or sells?
They're right here. We're at a buy. See the green one right here, 2093.
Okay, how about the sister?
All right, let me get that out for you. All right, here's the Russell. All right, Russell's at 1258. All right. I'll get the NASDAQ in a second. All right, NASDAQ's at 4436. Let's call it, I like to put a little lower, 4436.40. Right here. Here's the pivot, 4436.40. And the Dow is at, let's call it 17,882 or 17,880. 17,880 right there.
Okay.
They, lately the one has been a leader, and the other ones, and it's funny because the NASDAQ has been extremely strong. It's just like, you don't even want to think about shorting the market until that one has gone red. And then you got to see if it's up or down on the day. I mean, we're what, up 1, the Dow's unchanged, NASDAQ's up 11. So, what else? What's going on?
Okay. Do you have any opinion on gold today?
This pre-market gold, I said, I thought that gold, bonds, not oil, but gold and bonds were telling us that we were going to rally, right? Now that's the wrong chart. I got all these charts. Hold on a second. All right. Let me move that out of the way, and then I can get the right chart, I think. All right, huh? Unless I closed it. Oh, here it is. All right. All right. Right. So gold is what came off the highs of what, $9. It's about a $9, $10 break from yesterday. I had put the bull bear zone today at 1185.45. It's bounced off there 3 times. Okay. We're back inside value. Okay. It's above the opening range. So meaning the first 5-minute bar right here. Oh, that's the 30 million. I can make a 5-minute chart out of this, which I will. All right. So gold, like I said, it's bounced off the bull bear zone 1, 2, 3 times, got back inside value, went through the point of control. This looks like it's bullish right here, and we're above the first 5-minute bar high, which was 1187.5, right? So if gold stays rallying, I think that's going to be the sign that will show us that we are going to go back and test the lower part of the range, but we're going to have to get out of this consolidation first. So that's what I had in gold. Let me take a look at bonds and see what they're doing. Bonds has been like Groundhog Day, right? Every time it makes a new low, we just go and buy it. So bonds, same thing. It's bounced off the bull bear zone and stayed inside value and trying to rally. So if bonds rally and gold rallies, I think you'll see us sell off. You know, I mean, it makes more sense if we, you know, we sell off because of that. How many PR you guys have? If you're trading the spoos, it's been really a hard trade, hasn't it? It's been so hard because of we're stuck in the range. Now we're going to get this sort of formation. I mean, I look at these formations and I go, are they making up new ones every day? I mean, price cross for, I mean, this is crazy. It's crazy. So, you know, I look at this, and if we can get above 21, you know, back outside value, that's, and this is why when I look at things like this, it's like, what do you do? Flip a coin right now? I mean, if you're going to err to the, you know, be long with a stop down here, because everything seems to be, you know, positive. But when you look at the numbers for the day, you got that look because, you know, we had some sell off this morning and then we recovered. So I mean, the Dow's, you know, the Dow's only up 8, we're up 1, and the Russell's down 1, and the Nasdaq's up 10. So I think it's just another sort of consolidation day. What's up?
Okay, how do you define a failed range extension? Certain number of ticks or more of a gut feel?
I look at more the price action, right? Are you talking about like, you know, when I look at things like this, it seems like all the failed extensions seem to, you know, are on the downside. When I see things like this and then they're trying to push it, and then the sellers just have to give up, you know. I don't know. I don't, it's not a gut feel. I mean, I'm definitely looking here. Like, one of our rules is if you're going to take out, you have to take out the Globex high by at least 4, let's say 5 ticks, so 100 points. If you take it out by 100 points or so, then I believe that that's a good extension of that range, and that you should continue going to that area, right? You know, here you're not even coming close to the Globex low. So I just there's certain things that I look at certain levels for the failure, like, you know, above here you're going to be 2101.75, right? And we've kind of, like, if you see on our indicators, we've kind of and they're, you know, they're going sideways. Basically, the market's going sideways. All right, the moving average is going sideways, and here's the top of the VWAP. So this is our 2 standard deviations from the VWAP right here, and we got our exhaustion dots. And look, when we got up to there, they couldn't go nowhere near them, and then that was it. They fell back inside value, and this is that middle area that I'm talking about for today. So it's really been a hard trade. I you know, I feel for everybody because it has been a hard trade.
Yeah.
You know, how do you prepare for something? I mean, you can only, at this point, you got to just stay on the sidelines. Or if you're already convicted to your buys, make sure you have your stop in down in here. But I mean, this is kind of showing me in this heat map sort of that there's a lot of activity that wants to keep buying this market, even down to 96 half, even through the lows, 95. So the only thing I can do right now is keep you out of trouble.
All right. Will Smart says, "Sit on your hands, Lewis."
Sit on your hands. Yeah, yeah. What are you gonna do? I mean, it's like flipping a coin, right?
Yeah. Bighorn 55. Can you go back and show how spoofing affects the market and how it's detrimental to traders? Thanks.
All right. All right. So I mean, this is not a new concept, right? In fact, I may be the guy who invented spoofing, but not electronically, right? So let's say the market's, well, it's right here, right? It's at one even, and it's 975 bid, right? So what I would do, what I used to do in the pit, okay, is that I would put orders. I was long and I wanted to get out, right? I wanted to lighten up. So I would put orders in with order fillers to sell them at 21 even, 21 and a quarter, right? And I would have them sitting here. So they'd be at 21, 21 and a quarter, 21 and a half, 21.75, right? I'd have my order sitting there. And then I would get on the bid and I would start bidding, you know, half on a big number, right? And because I was a big, here, see that guy right there? You see this guy right here? The white, see the white? He's trying to goose the market up and then now he disappeared. Now he's up here. Okay, so that line showing me that the volume at that, let me the 400 cars that were at that contract, 200 of it, see, he's gone now. 200 of it was one guy. So he was trying to goose the market up so he could sell. So what I used to do is I used to do the same thing. I'd bid 75 on a couple hundred and then even on 100, and like the market was going, and I'd get all the other locals thinking I was getting long. Meanwhile, I had my sell orders in, and I was actually getting out of the market. So I'll leave this on the big orders, and we'll see here. The guy's here again, right? Now he's there again. He's goosing the market again. You see that? We'll see if there's any takers, and they, you know, you get away with this during the, you know, when the market's really slow, right? Sometimes they can't get away with it because when the market's busy, they do this. They go try to spoof a little, and then boom, they get hit on it. They don't, you know, they don't push the button to cancel enough. So, you know, I just think that if it's the high frequency guys, if this is a regular trader who's got the dough and the capital and he wants to put that order in, all right. You know, one of the things the market can do is that only give X amount of cancels per day. And if you exceed that level, if you're an institutional trader based on your volume, or you're a, you know, bigger like a hedge fund or something, use the market, charge to cancel. Put a price on canceling the order, and then see if that will straighten out the activity. Does that explain the spoofing?
Yes.
And it's not, you know, it's detrimental because they're bullshit offers and bids to try to sucker the retail guy.
All right. Culture horse. Lewis, give us an extended tape reading lesson, please. Thanks.
Extended tape reading?
Yeah.
I don't know if I understand that question.
Yeah. You want to know how you read the tape?
You want me to give you an extended tape reading for right now, for today? All right. If I had to guess, all right, I want to think that the market, I'm looking at the profile, okay? And I just want to stay out of the market unless we can stay above 2106, above value. If we go up here, I think you're going to get some run up and take this out. We went 1.5 times the IB range today is 2107.75. We've been looking at that target for a week now since we made that the breakout, right? On that 4-hour breakup. I'm also thinking when I take a look at this, you know, with the way the market's moving with the CCI, and it's not really, you know, going straight up. I'm thinking the market's going to spike up, and then I take a look at here. I take a look at bookmap, right? And I know that these are attractors, okay? These are attractors. So I would be looking for the market to spike back down in here. That's where I'm going to take my shot, right? I want to buy it in here, and then I'll put my stop down below that, because until we get consensus going down, now you see the The moving average is moving straight up. It's going to the oversold area. All right. You know, I just think that we've got to stay with the trend at this point. And we've traded. We're above the bull bear zone. The bull bear zone was the point yesterday where we broke. That's where the market and the move made on the way down, and now we're above that. So that's my extended week. I think we're going to be stuck between 97 and 105 until probably, I don't know, 1 o'clock or 2 o'clock. This is the time you should go work out.
All right, let's see.
Here's another thing, you know, all these things is that when I see the profile do this 5 across, I'm pretty sure this is going to trade back down to here. Or it'll stop short. When it stops short, and it does that with the next bracket, then you'll see it making sort of like a P formation, and then I think that you'll see the extension to the upside. So I kind of like to watch the formations that are made by the profile, and to give me a better idea of what I think the afternoon is going to look like.
One rotation too, 99.75.
Is what?
One rotation from the high.
Okay. So
0.75 to
2 rotations will put us where?
96, 2096.
Yeah. Imagine that 2096. There's all this. People are willing to take this. All this inventory sitting down here. So.
All right. Cultivars. Do you think that one guy in the UK is responsible for flash crashes?
You know, I wasn't around in the flash. Anthony said he was in the pit when they had the flash crash.
That was crazy.
It's something I read about. I didn't. I don't know if one guy was responsible. I had heard that, you know, he accidentally fat fingered it and sold like 300,000 S&Ps or something.
Yeah, he's supposed to sell 10,000 and sold a couple 100,000.
Yeah, a couple 100,000. So, yeah, I believe that. You know, I've seen. You know, when I remember in 2000, I remember in 87, I remember 9/11, where literally inside the market, there were 4 different prices trading, you know, and so, and that was because all the orders were coming in and brokers were just, it was so busy that you couldn't even, you know, there was just four different areas of the pit would be trading at different prices. You know, here's the, you know, I know these computers have an amazing amount of capacity, but, you know, they all have a stress level, and you know, when they're all the same way, I think we get to those stress levels. So I don't, it's not amazing, but that probably was a guy who was getting away with putting in a, you know, 1,000 lot or 20,000 lot or 10,000 lot to spoof, and he accidentally hit the wrong number and it went in there. Do I believe that happened? Yes. And then do I believe it? If they're charging him, I'm thinking there's some stuff we don't know yet, and I'm thinking that he may have done that before, where he cleared out the book.
Yeah, I mean,
Huh?
if they have a ton of money in an account too to.
Yeah, but you know, you get some of these. You know, you think about how does Nick Leeson bring down Barron's Bank? You know, here's one trader, you know, brings down Barron's Bank, and there was no risk management on him. This is the biggest thing that I if I had my pulpit and I would look at the exchange, I think that they should let you know to this day who's on the counterparty of the trades. So if it's Goldman Sachs or it's an institutional order, you should know and be able to see who's on those counterparties. Because right now, these electronic markets have no accountability, none whatsoever, about who are trading the markets and what they're trading and how they're trading them. You know, I think I've told this story before. Before, when the E-minis were getting popular, there were guys that showed up in the pit and they had, here we go again, we're trying to get above value, but there were people that showed up in the pit with headphones, okay? And they would be sitting in the pit, and then all of a sudden a big order would come in, like a 500 lot, and they'd be bidding it up, and that guy be on the offer, and I see him sell 300 of the 500 because everybody yelled sold, right? Or and so on, or the opposite way, the other way. And so I put my clerk on the e-mini machine to track his clearing firm anytime he was doing, to see his clearing firm on the e-minis. And what did I find out? You would see 2,000 minis get sold, and 5 minutes later, a big order come into the pit, and he'd be bidding lower, you know, 2, 3, 4, 5 handles lower, and the order come in, and he'd bid it, and they'd hit him. So that was telling me somebody was disclosing that order done, that there was going to be an order put in at a certain time, and he was trading in front of it. And they were using the technicality that it really wasn't trading in front of a custom order because you were basically on the e-minis executing those orders. So, you know, here we go. Let's see if we take out that high.
102 even minus.
All right. 1.5 times the agree range. Then we've got yesterday's high. $21.0375. You know, with the light volume right now, you really think that we're gonna, you know, it's hard to jump in and say, well, I'm gonna buy into this rally right now, right? But it seems like they're doing it now. Here,
we had resistance at 2103.
All right.
Earlier today, the first time.
All right, here, this is the new, going back, trying to test the new highs again, right?
Yep.
So
all 3 axis low X high.
Right.
And 900.
I started looking at bookmap like more like a chart now. You know, you can go like this and right and get out there and kind of see how the orders were being entered and filled. And you know, that's no different than you know, a candlestick chart I'm looking at, right? But this is telling me it's going to be, you know, it's not going to just shoot right past this, right? But you know, if you believe in our indicators, right? Our indicators are green, 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 right? You know, you take a look at the moving averages. They had crossed back here. They're both green and pointing up. We're getting out of sight of value to our first extension here. So, you know, everything's pointing that we're going to make a new high up in this area. I'm looking at the sisters, and they're all, well, see, the Nasdaq's off its highs. The Dow is off its highs a little bit, and the Russell is off its highs a little bit. So it looks like they're trying to make a run on the upside here. I got the advanced decline here. All right. This is the action for today. It looks like it's broke over the center here. So it's gonna maybe one of those just little slow, you know, slow creep up the rest of the day. Taking out all these resting orders that are sitting up there for these longer term players who bought the market the last couple of days, and this is their exit.
1040. You got a story from the pit? Something in mind?
I haven't really thought about it. How about let me think about one of the better stories.
Okay.
I like the formation now with the moving averages pointing up. I like this going up here. It's getting to the, you know, overbought or area. So, you know, like I said, it's when we first opened up, I said if I had to err, I'd err to the long side. That top of value is just such a. Did we start the day out below value? That was this morning. We've been inside value since we opened. So.
All right. I want to know what indicators you're using.
These are ours. They're CCI, but we have special settings, and we've kind of retooled them for our use. The pivot is something we've used for years, and you know, they're things that we've developed over. Pat and I and Reed have developed over 20 years of using them. We keep redefining them. They're not. They're a mixture of moving averages and time frames. This one here, this green one here, is an intermediate sort of time frame. It's bullish. It's I think it got a maybe 43 bar look back or something like that, but it's got other things in it too, moving averages and so on, which we've been waiting to get out to everybody. We are currently programming some of them in 2 different platforms, and then we're going to roll them out with some of the new programs that we're thinking about, that we've been thinking about. So,
Wall Street Frank.
Yay.
What's your morning routine when preparing for the day of trading? What homework do you do?
Well, I get up about 5:30, 6 o'clock. I start looking at Europe, and then I start looking at all the overnight action on basically the 4 markets: oil, bonds, gold, and S&Ps. And then I look at the profiles, and I jot down on a piece of paper all the value areas and the modes and so on, and then I ascertain what the bull bear zone is going to be, and then then Anthony gets here about 6 o'clock, and then we start entering the things together, and then we start looking at the different market levels, and I talk to him as I'm trying to teach him. We're bouncing ideas off each other and so on. So that's my routine. And then tonight on the market, when the market closes, well, we look at it and think, all right, if the market's here, we want to be a buyer. If the market's here, we want to be a seller. So we develop a plan of where we would execute at. And then when the market gets to an area what we want to execute at, that's what we do. So, and my routine is usually to look, I look at the big time frames down to the small time frames, right? So I look at the daily, then I go to the 4-hour, then I've been looking at this 12-minute chart. This is a 12-minute chart here, okay? And then, then I'll go down to the 5-minute and so on. And then I try to look and see, like, for example, we have these pivots, but we also have them at different time frames. So one of the time frames so I like to look at the multiple time frames, right? So here's the 15-minute, right? So this is telling me we just took it out. So now this is telling me that we are basically, because we took the 15-minute pivot, that I think this rally is going to probably have some teeth, right? Well, I should have been looking at that, but then I'll go and I look at the 30-minute pivot, all right? All right, so here's our problem, right? The 30-minute pivot is sitting at 2102, basically 2103. So that, thanks for asking my routine, because I would have had this charted on here already, right? I'm out of the market, so I wasn't really paying attention to that. And so that's telling me that we had a lot of resistance up here, this 2103, and that's why we stopped this morning there, because we didn't have enough momentum to get through the 30-minute pivot. So I do that every morning, right? So I do that I go from the daily to the 4-hour to the 30-minute to the 15-minute to the 12-minute to the 5, and then I keep a minute chart up, right? And that's my routine, right? And I look at profile, and I try to find unfinished bottoms and tops and areas where the market should retrace to. So, that's my routine. It's pretty simple.
All right. Do the wheels fall off once the Fed rate goes up in the market?
Let me ask you a question. I'll answer that question with the question. If you're sitting in equities right now and they raise the rates by, and they usually like to go in quarter points, right? So let's say they go 0.25 basis points. And now our CDs go up by 0.25. Is that enough for you to get out of the market and say, that's it? I'm making 1%, 0.075 on my money. I'm getting out of the market. I think it's going to be more psychological, that they raise the rates. And I'm going to tell you, and I've been saying this all year, I don't think they're going to raise the rates at all this year. And if they do, it's going to be a sympathy raise to try to make everyone believe that the market, we've got inflation, our economy's better, and so on and so forth. And I don't believe that our economy, I think there are sectors of our economy that are better than others. And one of the things I looked at the other day, I was looking at this, I look on the online news for my entertainment, but I'm looking for the business schools, the best business schools in the country. So usually it was Harvard, University of Chicago, 1, 2. Number 1 business school, Stanford. Did that surprise anybody? No, because all the technology is coming out of the West Coast, right? All the venture capital funds. All right. So I think technology and certain segments of our society, right? You look at the healthcare stocks and pharmaceuticals under Obama, what he's done. I mean, he's pushed those things to the stratosphere. So I think there's certain segments in our society that are doing well, and there's others that aren't doing so well. The real estate market has not recovered, and I don't think that I said this a lot. I bought my first house when interest rates were 18%, and the market was better than it is now. So, and it's a combination of a couple things. There was a lot of damage caused, and now there's too much regulation. So, and the big banks they only loan money to people who don't need it. So, long-winded answer is that we're going to get, if they do a rate hike, it's going to be 0.25, and it's going to be a sympathy rate hike to try to make people believe that everything is, inflation's coming, and here's we are, where we're at, and so on. I don't know how you're going to get inflation with oil going to where it's at. Come on. That extra $50 a month, or every time you fill up, every $60 is going to, and I think I saw something that oil prices at $50 will put like $1 trillion in the consumers' hands, and they're going to go out and spend that. I'm not sure. So.
How do you define the bull-bear zone generally?
I like to, you could do an ongoing bulls-bear zone, right? I like to see where markets move from the middle, right? So I could go right here, right now, and say, okay, all right, we broke out of the middle here. I'll stay long as long as we don't get under, let's call it, the bottom of F here. But I got to wait for F to complete. All right, we got to wait for F to complete. All right, so when it gets to like 11 o'clock, and if we're still trading up here, and I'll look for the next segment, right? That's how I do it. I look for the for where the market moves out of a sort of a consolidation pattern. We definitely think this is consolidation, right? From 2097.75 up to 2101 and a quarter. We know this is consolidation. So kind of look for, you know, what bracket does it come out of the consolidation? Does that make sense?
Yep. All right. Lewis, the market usually rallies the week before option expiration this week and before FOMC, NFP, etc. True, correct?
I think, well, lately it has been, and this is my, you know, option expiration. Usually you're getting, if you get a rally, you're going to get the opposite. You know, option expiration, I just think makes the market more volatile. You go up, down, or you might go down, up, down, and finish up, but you're going to get some volatility. But I think I was listening to Linda Raschke when she was on Top Step, and she said she had a love-hate relationship with bonds. And it's the reason she doesn't like it anymore is because the market doesn't trade like it should if it was left up to its own accord, right? There's too much stimulus and too much interference, right? So here's bracket F going up here. So like I said, I had got, you get long, we're waiting for the market to complete itself. But this would be a telltale sign for me saying, okay, we broke out of the consolidation in this area. So why don't I just, you know, use that as my stop on the downside? And FOMC, we've been rallying because everything they do and say doesn't hurt the market. They don't do anything to hurt the market. And they're so fearful.
Go for the highs.
Yeah, and here it is, the 30-minute pivot too. Let's see if we take out the 30-minute pivot. So you're gonna have to get that on a, you know, it's trading above it. All right. It's taking out these resting orders up here. There's a guy here spoofing, he's spoofing, he's spoofing. We'll see.
New highs.
New highs, there we go.
375.
Let me see what price is that?
05.
Yeah. He took it out. No, he's not at 03. Let me see what they got sitting there at 03. There we go.
06 quarter, 06 half.
All right.
675.
There we go. Remember I said it's 7 quarter. Now that 2108 quarter is R1. So will we get this? Will this close stay above this 2103 half? If it does, then I think we're gonna go now. Now we okay. Now we're getting this extension. Here's 1.5 times. Now I look for, you know, that's definitely a target. 2110, 2107.75. Okay. And then 2 times the IB range is to be 21, basically 2112, 2112. So this was good that you were able to spot this when I told you, you know, I would split it here because it looked like it broke out, right? But look at this. Here we go.
075 filled target.
Yeah. And you see how this is all light colored here? That means there's not a lot of volume up here. So that's why the market's running. The buyers are, right? Here's our next big. Here, somebody jumped in here now. Well, I think that's a spoof. Let's see if he disappears. Boom, gone. Right? So that's a guy who's long and he's trying to goose the market and get out. Here's 2110. That guy's legit. He's been sitting there. Let's see what he's gotten. You got 1,100 cars sitting up there. All right. Here, I think there's going to be a spoof right here. This 2107, that's a spoof. See, gone.
Wait quarter. 21.12 next target.
Yeah. So look, this is not some sort of rocket scientist going on. I got all these things, right? Let's see if this guy's legit. Right? I look for confirmation of what I want to be, right? I let the market tell me.
$21.09 current high.
This guy looks like he may have gotten short here. It looks like he wants to take some back. Well, yeah, because see how it's not disappearing? They're taking it. They're taking it. He's buying. He's buying. That white line is solid.
Real paper filling in a weight half.
Yeah. He's there. And those guys are there at 21.10.
They have 4 minutes on.
All right. Any other questions? Yeah, we got like 4 minutes left, and I'm glad we got to move. And and you kind of see my my train of thought when it comes to things like this. Now, we're probably going to get on the half hour now. I know that the 30-minute pivot is going to turn into a buy. So now I got the 5 in a buy, the 15 in a buy, 30 minutes in the buy. Let me see where the 60's at, right? So these are the things I look for, throughout the day. Just get some, you got to get confirmation. $60-minute pivot will turn into a buy also on the hour. So I'll stay on a little past, so you'll see that 10:57 when that goes to 11 o'clock, these will turn into a buy. And then remember that I had the 4-hour pivot right here at 21.07. Right here. So if this is all above this at 11 o'clock, if we're above that 21.07.5, then the 4-minute pivot will turn into a buy. All right. I mean, the 4-hour pivot will turn into a buy. So
Look at the angle on that CCI.
yeah, CCI, look, came back down here, bounced off, straight up. Look at the moving averages. I mean, well, those are yeah, that's the
Killer dog.
That's my killer dog. I got people coming. Remember I told you we're starting to do the documentary, and we're going to start filming today. So my dog's ready to kill everybody. All right. So sorry for the distraction. I hope this was helpful. Are there any other questions before we sign off here? Sellers coming in here. That's why I like this book map. When you see, you see dark, you know that there's not a lot there.
Got 05 quarters, one rotation from 9.
What is
05 quarter? 21.
I made it down on the bound, right?
Yeah.
What about from this low? The low today is 20.95 half. Give me what? 4, 4, and 4, which would be 1,200 points.
07 half.
All right, there you go. That's 3 rotations, 21.07 half from the bottom. So, all right, people, I have got a film crew come walking in here soon, and we are going to start filming the documentary, and it's probably going to take about 6 or 7 months. There'll be some interesting things on it. Also, we are going to be rolling out some new programs as far as trade assistance and trading with us. So as soon as we got everything concrete, you'll be the first to know. So All right, everybody. Thanks for signing in. We'll talk to you later. And thanks for coming. Bye.